Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only, and for those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law, and through this channel I'll be providing some stock analysis and also a short trading lesson at the end, so please stay tuned. In the previous video we looked at ticker symbol BIIB, Biogen. This is a stock that I'm quite bullish about. I think the potential long term is very good, especially as they had a breakthrough in a treatment for Alzheimer's, so please refer back to the previous video for updates on BIIB. So today's stock analysis is going to be for Meta, ticker symbol MMAT, previously Torch, and we have a big day tomorrow, so I want to look at a number of things, but let's first of all start by having a look at the announcement of a new market cap. Before we start with today's stock analysis, I'd like to give a special thanks to everybody who joined the Discord and the Patreon. Today I looked at due diligence for a new potential penny stock, so if anybody's interested in that, please click in the description below for details of the Patreon on Discord, where information on the new stock will be shared first. So let's have a look at the announcement of a new market cap for Meta. So on the screen here you'll see that Nasdaq has elevated Meta to unicorn status, so the materials company is now listed on the Nasdaq with a $2.2 billion market cap, and as we know previously the market cap was not updated, so there are also arguments to suggest, due to the algorithms and the calculation of the price and the volatility, it was higher and possibly causing the price to trend downwards. So let's see what happens this week with announcement of this good news with regard to the market cap. In today's video I'm going to be looking at a potential calculation for the dividend. I'm also going to look at further information with regards to communication that was shared with me today, and that's with regard to a squeeze. But first of all, what I'd like to focus on is what's happening tomorrow. So what's happening tomorrow, as a reminder, there is an announcement, there is possibly going to be some PR, so let's have a look at a tweet from George here, and what he stated is that we will be sharing further information on official PR to help further discuss the process, all of which was described in the proxy circular. Hope this helps. Or again, that's quite cryptic, it's not giving much away, so we're going to give the benefit of doubt till tomorrow. I am expecting some good news. If there is good news, I'm certainly expecting the share price to spike up quite significantly. People are speculating about announcement of a potential Tesla link. There is also speculation about maybe a clue about dividend dates, and I don't think we're going to get information in terms of how much the dividend will be, but we'll find out certainly tomorrow. So that's the next thing I'd like to focus on. How much dividend could we expect? What I would now like to do is give a special shout out to Jay Spores on Twitter, who has taken the time to carry out a speculative calculation of dividend here in terms of the Oro Grande asset that Torch has. So what this calculation is excluding is what was mentioned in my previous video, which is the potential $6.4 billion sale that happened previously, and gives us an indication of the potential value. So this is not including the land in that area. This is just looking at a potential dividend based on the Oro Grande asset. Before we look at the first calculation, I'd like to just remind everybody, especially the bears, who have stated that this land has not got significant value because there's no oil. So I'd just like to remind the bears that this is not true. Is an article here dated 26th of February 2020 that the company did strike oil and gas at this location. So let's now have a look at the calculation of the valuations. So first of all, we're looking at a net acre land of 134,000. So that's the factual information. We're also looking at a 0.665 deduction for working interest. So the first calculation on the left, I'll go through that with you. That comes to 89,110. The average per acre valuation according to the sale is $5,000. So that we're looking at for every acre $5,000. So total acres 134,000. Average per acre valuation at sale, that's this 5,000 figure is actually based on the most conservative value. So this is the lowest possible value that the company could achieve. So that's going to give a total sale value of just in excess of $445 million, minus a 10% fee for legal fees and that kind of thing. And it's divided by 145,000 shares, giving us a return of $2.77. So if anybody is actually interested in the specifics and how did we get the 445,555,000, I'll just share the calculation here with you if anybody wants to just check it themselves. So you get the 134,000, you multiply that by the $5,000, and then you times that by 0.665, which is the working interest. Then you minus 10% for the process of the fees, and then that gives you the valuation there of 400,995,000. So that's just if anybody's interested in the calculation. But let's move across and look at changes if we get a higher valuation according to the acre. So if it's 10,000, the dividend is $5.53. 15,000 per acre, the dividend is $8. If it's 20,000 per acre, the dividend moves up to $11. So this is all the first stage of a conservative calculation. Let's have a look at some more bullish estimates here, and these are based on a higher amount of valuation for the land. So this is starting from $25,000 per acre. That would give us a dividend of $13.83. And then if we go to the extreme far right, and if we get a return of $40,000 per acre, that would give us a dividend of $22.12. Some of you may well be thinking that George stated that the dividend would be between $1 and $20 per share. However, if you look carefully at the transcripts, it has been suggested as that was a guide, so it can certainly go higher. And the reason why it can go higher is because we don't know how many shares were sold on the non-qualifying days, and we also don't know the value of sale of assets. So that's why it's just a very speculative and suggestive guide. So we're going to finish off here. Valuations, row number 3, and this is getting more bullish. So if they're sold for $45,000 per acre, $24 dividend per share. $60,000 per acre, we're looking at $33 per share. And this is the most extreme bullish calculation here, and that is if it goes for $80,000 per acre, which I think obviously this is the most optimistic, then we're looking at $44.25 per share. So that's the calculation carried out by Jay Spores on Twitter, so shout out to him there. Let's have a look at a different angle on this now. The next calculation I'd like to share with you is from Chalet. So special shout out to Chalet, who is quite bullish as well. So what he said is the Oregando Basin is one of the world's largest onshore field discoveries in decades. So certainly if you refer back to my previous video, I did show that there is confirmation of oil in terms of their assets. So that was in the Permian Basin, but now we're looking at the Rio Grande Basin. So these calculations are only based on the Rio Grande Basin, so it's potentially looking as though we should be entitled to a much more better dividend. So let's see what Chalet has said. So he said, first of all, this land was purchased in 2014, looking at 850,000 shares at $3.5 a share, plus $100,000 in cash, with 75% interest. So let's see what we have in terms of a calculation from Chalet. So what he's basically saying is that if it was sold at the original price, then we would get 61 cents per share. However, that was a long time ago, and that was prior to discovery of oil. So obviously with oil being discovered, and certainly I'm sure you're all aware, the price of oil is now rocketing. It is definitely going up, so that's good news for our dividend, good news for our business here. And what's happening here is what he's basically saying is, in terms of the amount of oil in the land, 3 estimates. On the low side, 2.3 billion barrels. Mid case, 3.7 billion barrels. On the high side, 5 billion barrels. So we can go with maybe the mid side. So what he's also saying here is the property is near a refinery, LNG, liquid natural gas, in terms of a pipeline. So the land has lots of potential. So if it has potential, then that certainly increases the value. Let's see what else he's come up with. So what he's confirmed here is confirmation of what I've just said, that oil is currently just exceeded $70 a barrel. The more it goes up, the more we will get in for the land. So the Biden government has banned future drilling on federal lands, making them public, effectively making public land like Oregano Basin much more valuable and much more desirable. So good news there. So in terms of confirmation of the value, right at the bottom, he's stating that subject to the oil, subject to the valuation, he thinks the dividend is going to be well over $20. So I'm going to finish off on the valuations by giving a personal opinion and what I think. So in my personal opinion, taking into account everything that has just been stated by the two different valuations, which are both quite bullish. So everybody who has been following me for a while would know that I am generally a little bit more conservative in terms of my valuations. However, bearing in mind all the information that has just been shared, I am a little bit more bullish now about the dividend. The only thing that concerns me is what's happened in this whole merger process is things that have been announced and released that we were not aware of. So taking that into account, let's say, for example, they don't sell at market price, something happens, there is a hiccup, there is a problem, then obviously that's going to drive the sale price down, which means we're going to have a lower dividend. So bearing the pros and the cons into account, I think my estimate for the dividend is now going to be around between $8 and $12. So that's my estimate. Again, time will tell what happens. Okay, that was going to be the end of my video. However, just I was about to edit the video, I did receive an email from Shifty, so I'll give a shout out to Shifty, and he just sent me a quick email sending me some information with regards to MMAT, sharing some due diligence. He's suggesting I share this in the next video. I was quite skeptical about what he's saying, because what he's suggesting is there is going to be another squeeze. So we certainly know what happened when George suggested there was a squeeze. It failed to materialize. However, bearing in mind the situation, that we don't want a situation where it's the case of the boy who cried wolf, I think I'm going to share the information that Shifty did provide with to me. Okay, so the information he shared with me was with regard to a timeline for taxable OSTK. So this is something that has been looked at previously in terms of a comparison with the dividend that happened a while ago with this stock. So however, what he's done now is put everything into context in terms of a timeline to suggest that the squeeze is going to happen, but we expected it to happen earlier. However, according to the dates he's sharing here in terms of the timeline for what happened with OSTK, he's predicting a squeeze at a different date. So let's just give him a bit of time in terms of his theory. So he said in terms of the record date, the ex-dividend date, the T+21, and then all the other dates, what basically happened right at the bottom, just to conclude, after the sell-off, after the merger, obviously the price went down. You know, it kind of became a little bit volatile. There was a lot of sell-offs, but the conclusion is, near the end, what he's basically suggesting is you're looking at a squeeze in terms of around about 119 days. So after 119 days, he's suggesting the squeeze at that time was 1,133%. So the details are all there. Again, however, I am skeptical because this is referring to overstock, so it's not really an accurate comparison, but certainly people are drawing comparisons here again. So he's suggesting the squeeze is going to be after 119 days if it's quite similar to the process here. The stock going up, the stock going down, and all the factors to be taken into account of. However, you know, if what he says is true, I don't think anybody would certainly be complaining. Okay, so due to an extended stock analysis, the next lesson will be the next video. So thank you very much for joining me. Please stay tuned.